we should probably be 150, 175 basis points lower. So, I think the committee needs to step back.
Treasury Secretary Scott Bessent fueling market expectations for Fed easing, telling Bloomberg it's time for a series of cuts starting with 50 basis points next month. Live from Singapore, this is Inside with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Our Bessent interview also moving markets in Japan. His call that the BOJ is behind the curve on inflation, strengthening the yen and hitting Japanese stocks. We'll talk investment strategy with Laffer Tengler Investment CEO and CIO Nancy Tengler. Hear why she's bullish on tech stocks, including Apple. Also ahead, we speak exclusively with Galaxy Entertainment COO Kevin Kelley as solid second quarter results signal the company's longer-term confidence in Macau. Plus, how Narendra Modi is seizing on growing friction with President Trump to boost support from key voting blocs ahead of a crucial election. Asian shares weaker after 3 days of gains driven by bets on a Federal Reserve interest rate cut next month. Traders are leaning toward a quarter-point rate hike from the Fed after this week's inflation numbers came in softer than expected. But it's not just the data driving expectations. There's also political pressure. Treasury Secretary Bessent speaking to Bloomberg Television, making his strongest push yet for the Fed to take action.
We could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September. The rates are too constrictive. If you look at any model that we should probably be 150, 175 basis points lower.
While Bessent is pushing for deep rate cuts from the Fed, he's taking a very different stance with the Bank of Japan. In a rare move, he criticized the BOJ's policy decisions, saying they're behind the curve on inflation, and also revealing he has spoken directly with Governor Kazuo Ueda.
The Japanese have an inflation problem. I've spoken to Governor Ueda. My opinion, not his, they're behind the curve, so they're going to be hiking, and they need to get their inflation problem under control.
Let's get insights from Nancy Tengler, CEO and CIO of Laffer Tengler Investments. Nancy, good to have you with us. They say when Bessent speaks, you should listen, and it does seem like the market is listening.
Thanks for having me, Haslinda. Well, I think what's interesting about that comment, I wasn't clear, he said they're going to raise. I don't know if he knows that or if he's suggesting that very strongly. But if you look at Japan and their balance sheet, it's 120% of GDP. And they own the majority of the fixed income in Japan. So if they raise rates, then the value of their balance sheet declines pretty materially. And that drives a sort of a self-fulfilling prophecy of rates continuing to rise. We think we have a problem in the U.S. where we have a $6.7 trillion balance sheet, but a $30 trillion GDP. So I think it's maybe not so easy as the secretary would suggest. And I think what the Japanese have decided to do, at least up until now, is raise very slowly. The 10-year is at 1.4%, and CPI is at 3.3%. So they're mismatched. They do need to raise, but I think they have to do it very carefully.
It's also depending on whether that inflation trend continues from here, isn't it? And, if you take a look at the GDP data that's likely to come through, that may play a role as well.
No, absolutely right. And I think that there's so many variables involved. And then you've got the yen strengthening, and someone from the Japanese government, I can't remember who it was, came out and said, this was a move by Bessent to weaken the dollar, which we know is an objective of the president. I don't happen to agree with that. I think you want a stable dollar, not necessarily a weak or strong dollar. But that is something that the president has always believed, President Trump, that is. And so that could, in fact, be a strategy. I don't know. But I think you have to take into account all of the factors: GDP growth, productivity, and those are things that are important to look at when you're looking at the macro.
And when it comes to the yen, though, the rally in treasuries is also helping yen strength.
Yeah. Yeah, again, there's so many variables. They're not necessarily linearly connected, but we know that the yen serves as a safe haven currency, and the dollar has been pretty weak, and that means that we're exporting deflation and importing inflation in the U.S. So I think there has to be a balance there as well, and that is one of the reasons that I do think it's important that the Fed cuts, but not to the levels that the secretary was speaking to this morning on Bloomberg.
Nancy, when it comes to the overall market sentiment, it does seem like sentiment has shifted dramatically from just 2 weeks ago on expectations of that rate cut from the Fed. Hearing what Scott Bessent said recently, it does feel like, it's fully priced in already, and that will justify the rally being sustained going forward.
Yeah, what's interesting is that, the short end doesn't necessarily dictate the long end in the U.S. And so what we'll need to see is some pullback from the 10-year, which was at 3.6% yield just in the fall. And then remember, the Fed raised rates 100 basis points from September until December, and the yield on the 10-year Treasury rose as well. So there are a lot of cross currents. I think it's safe to say, and I've been very critical of the Fed, that they've lost credibility with the market. And so you have the secretary saying 50 basis point cut. I think we'll be lucky to get 25. I think that's just fine. Long easing cycles usually benefit risk assets and stock prices. And I've drawn an analogy on your show and for many years now to the 1990s. And we had a 10-year Treasury that was between 5 and 7%, 7 to 8%, a Fed funds rate at 5 and inflation at 3. But because productivity was driving economic growth, we were able to see sustained stock price performance for 5 years. And I think we're in an environment like that, but with much more robust companies and much more robust technology.
Nancy, am I wrong in feeling that the market is really underpricing risks? I mean, tariffs have yet to bite. If you take a look at what Goldman is saying, it says U.S. consumers and businesses will bear at least 75% of the brunt of tariffs. And when it comes to the CPE, it's likely to increase by about 3% by the end of the year. And this is the gauge that the Fed is looking really closely at.
Yes, but Haslinda, what no one is talking about are the benefits from the One Big Beautiful Bill, and that is that there will be 100% bonus depreciation, 100 upfront expensing of R&D, and deductibility of interest expense. And Zion Research just did a calculation on the top 400 companies in the S&P 500. Cash savings will result in $148 billion. 38% of that, or greater than 50 billion, is going to go to Meta, Amazon, Google, and Microsoft. So there are offsetting benefits that we're not engaging in the conversation. And those are very important, because what we heard from companies in second quarter earnings was a good deal of raised guidance. We saw 83% of the companies beating on earnings, 80% beating on revenues. I've never seen a number that high. Usually revenue beats are somewhere between 60 and 65%. 80% beat on revenues. And that tells you that there's a lot of good activity going on despite the tariffs. And I think, the verdict's not in yet, and we may still see, really hard hit on earnings. But so far, if you take what we've seen and then you factor in the benefits of the tax bill, it could be a very powerful run for a number of years in U.S. equities.
So for now, the stars are aligned. Hang tight, Nancy Tengler of Laffer Tengler Investments is sticking around. We'll discuss the outlook for Nvidia and Apple with her just shortly. Also ahead this hour, Galaxy Entertainment cashing in on a revival in high-stakes gambling. But it's not just about the tables anymore. We'll speak exclusively with COO Kevin Kelley about the company's growing bet on concerts and other non-gaming events. Keep it here with us. This is Bloomberg. Welcome back. Tencent shares higher in Hong Kong after the tech giant beat estimates across the board, with second quarter sales growing at the fastest pace in 4 years. The international gaming segment stood out, and the company says AI is already boosting everything from ads to games. Tencent is ramping up its AI spending to keep pace with rivals, the likes of Alibaba and ByteDance, but says it will be prudent. And when it comes to chips, Tencent saying it's well stocked with Nvidia processors, even as Beijing urges firms to steer clear of the U.S. company's H20 model. Nvidia and AMD have both recently secured Washington's approval to resume lower-end AI chip sales to China. That's based on the controversial and legally questionable condition that they give the U.S. government a 15% cut of related revenue. Treasury Secretary Bessent telling us that President Trump came up with that idea, which could serve as a model for others in the future.
The president is one of the most open-minded people I know. He does everything at first principles. Why do we do things this way? Why shouldn't we do it the other way? And, I think that this is a very unique solution, allows Nvidia to expand into China. It can make Nvidia chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword unique. Is it unique to Nvidia and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, right now, this is unique, but now that we have the model and the beta test, why not expand it?
What do you say to people who think we're putting a price on national security concerns by basically selling export licenses?
There are no national security concerns here. We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. Right. So we do not want the standard to become Chinese across the world or even in China.
Well, we have exclusive reporting that Beijing is now sending out letters to firms saying actually shrug off those H20 and use our domestic champions. Is this something you might discuss with your counterpart?
Oh, sure. We can discuss that, but it also tells me that they are worried about the Nvidia chips becoming the standard in China. Look, Nvidia is an incredible product. A lot of the technology in China is, they're piggybacking, and I'll use piggybacking as a kind word for acquiring our technology.
Do you mean stealing?
Your words. And yes, that's what I mean. And the Nvidia, Jensen Huang just stays years ahead of them.
Criticism came from the Wall Street Journal editorial board, though, about this new unique policy. They say it's a step toward government control of private business. Are you concerned? Some of these policies are starting to look like the country you're actually trying to de-risk from. Central planning, basically, out of the Oval.
No, not at all. Because where we got was with this unfettered trade, we did not have secure trade or fair trade, and so now we are trying to make it secure. So you don't want to. We're not sending out the highest level chips, and we don't want to sell everything to everybody. So there is a need for intervention.
That was U.S. Treasury Secretary Scott Bessent speaking to Bloomberg's Jonathan Farrow and Anne-Marie Hordan. Nancy Tengler, CEO and CIO of Laffer Tengler Investments, is still with us. She says she's still bullish on tech. And Nancy, for someone who holds Nvidia, is it comforting to hear what Bessent had to say?
Well, I'm actually with Anne-Marie on this one, Haslinda. There is a clause. I mean, it's Article 1, Section 9, Clause 5 of the Constitution says you can't charge export taxes. So we'll see where this ends up. But I think the good news is that, you know, Nvidia already took the charge last quarter, and then we saw the trip to the Middle East. Saudi Arabia committed to a number of chips. If China does begin to reuse the H20s, I mean, it could have a profound effect on revenues for Nvidia. So, you know, we still like the stock. We trimmed it recently because it got to be such an outsized position. But I think earnings will not disappoint, and you will see a company that continues to delight investors on earnings growth and revenue growth, and is really not trading at that high of a valuation when you look at it on a price earnings to growth basis. So we're going to continue to hold the stock in here and enjoy the benefits of doing so.
What's the biggest risk to investing in Nvidia right now?
Well, I think that China does, you know, we've heard that they've sent letters to a number of their hyperscalers and internet companies and said, hey, don't buy American chips, and particularly Nvidia chips. I'm not sure that's real. I think it's a tactic, and I applaud it as a negotiating tactic. But if that were to be the case, and we did have to see Nvidia exist without Chinese sales, then that would require a revaluation. But I don't think that's going to happen, because they have, even in the H20, they have a more competitive product than and chip that's available than is available from Huawei and in China. So we think China will continue to buy the chips for a number of years and allow Nvidia. It's also the ecosystem, Haslinda, because it's about the developers, and they love developing on the Nvidia software with Nvidia chips.
And apart from Nvidia, you're also loving Apple. In fact, you added to your position. I'm just wondering why. Because some say that perhaps when it comes to its supply chains, it's pretty much focused on China, on Taiwan, and there are real geopolitical risks there.
No, 100%. And that's why the stock has not performed over the last year. We added to it last Tuesday. It was just luckily right before the announcement that Apple made that drove the stock price up 25-30%. So we bought it at $202 a share, and it's now trading at something like $233 a share. The reason we bought it, it had not participated. The earnings report was quite good, actually. All of the product lines were up double digits, low double digits, including iPhones. Revenues and earnings growth exceeded expectations. And Tim Cook is the CEO that everyone loves to underestimate. We got into the stock in 2012. It was right after the Google Maps debacle. But he under his tutelage, the company, or the stock, has returned 32% annualized since 2011 when he stepped into the CEO role. So, you know, one of my friends in the industry, Dan Ives, recently wrote a piece that said, you know, this is Apple's BlackBerry moment. I think they know that, and we're starting to hear some announcements about what their AI offering is going to look like. So I just felt like it was a great opportunity to buy, you know, a $3.5 trillion company at a discount, and so that's what we did.
How are you pricing in the risk from regulation? Under the Trump administration, we're seeing tighter regulation. It's under greater scrutiny. And some say that, you know, regulation is chipping away from Apple's ecosystem.
Yeah, and I think, you know, we're waiting for that antitrust ruling. That could change the calculus for sure if the company loses the $20 billion in revenues that they get from Google. I thought it was interesting that Perplexity made a preemptive bid for Google Chrome, even though it's not for sale. So there's a lot going on under the surface. I do think Apple needs to act boldly in here, and that's not really their culture or their nature. I believe Dan is right about that. that. It's time to demonstrate that they're going to be part of the fourth industrial revolution. And if we get a bad ruling or a deleterious ruling as it relates to Apple from the judge Mehta in the antitrust case with Google, then we will have to rethink how we're going to pursue this stock, because as it stands right now, it's under consideration for our 12 best ideas portfolio. And so we want to make sure that the regulatory environment is going to be favorable for the company going forward.
If you zoom out further and take the Mag 7 as a whole, I mean, they started out the year, on a very high note, and then the tone somewhat changed in recent months. I'm just wondering, what's the outlook for Mag 7 in the second half of the year?
Well, I think it's going to be different for each of the companies. So Tesla is on its own, and I still like the name. It also depends where you bought it. So we were buying a number of those names during the tariff tantrum, and we picked them off at very attractive valuation levels. But they are trading at, I would call it full valuations, not necessarily overvaluation, but they're also the only companies in the S&P that are reliably delivering mid-teens to low 20s earnings growth and even revenue growth in a decelerating economic environment. And we are certainly in a slower economic environment in the U.S. than we were in the second half of last year. You want to own the reliable growers. So we don't own Meta. We sold it a number of years ago and bought Spotify. I think despite Meta's strong performance, we got the better end of that trade. But we do own the rest of the hyperscalers, Google being the cheapest and Amazon being the most interesting to us at the moment.
And Nancy, it is about earnings, right? We have Bank of America saying that Mag 7 earnings will, the gap between earnings of Mag 7 and the rest of the S&P would narrow dramatically in the coming quarters. Is that worrying? Is that a reason why you should be cautious in investing in Mag 7?
Well, I don't think they're right, Haslinda. I mean, if you just look at every earnings report, every quarter, there's somewhere between 2/3 to 3/4 of the companies beating analyst estimates. So what we do as investors is we look across sectors. We have an investing theme that says old economy companies that are embracing the new technologies and the providers. We've drawn the analogy to the 1990s. I was managing money in the 1990s. Most analysts have been at this for about 10 years. And so what I think you have to look at is what is the total addressable market? And that doesn't necessarily model out very well on analyst spreadsheets. So we believe we're early innings in this AI revolution, and it's going to take on a lot of forms. It's going to include robotics, it's going to include quantum computing, and it's a lot more robust than eyeballs on a website, which is what we had in the 90s with the internet. So I think you want to continue to own these names. You use weakness to add to them. I've been hearing about the death of the Mag 7 for the last 3 years, and they've continued to power forward.
That's right. We've been talking about it for a while now. I'm just wondering, might the weaker dollar actually help earnings for
Yes.
U.S. companies like the Mag 7?
Absolutely. It benefits technology the most, I think, of all the sectors in the S&P. And, it will be weak for a while if the administration has anything to say about it.
Nancy, we have to live it there. Great stuff. Nancy Tengler of Laffer Tengler Investments. Still to come, Galaxy Entertainment expanding its playbook with high rollers driving strong earnings. The company is now turning up the volume on live entertainment. We'll hear from COO Kevin Kelley on why concerts and non-gaming events are becoming a bigger part of their strategy. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Analysts say Galaxy Entertainment's higher dividend payout following solid second quarter earnings is a signal of management confidence in Macau. The company reported a 12% jump from last year in adjusted earnings, with revenue topping $1.5 billion US. Joining us exclusively is Galaxy Entertainment Group COO Kevin Kelley. Kevin, good to have you with us. Strong numbers. What's the story behind those numbers, Kevin?
Oh, well, look, I think we see some improving fundamentals in the market. which are helping us. But I think at the same time, too, the company is very, very focused in executing its core strategies, being able to cater to multiple segments in the market, as well as leveraging our entertainment platform, which has been very successful over the last year and a half.
Let's break it down and talk about first your gaming revenue exceeded expectations like the rest of your rivals as well. Is this a case of the wealthy Chinese coming back and willing to spend? How sustainable is that? What's the projection going forward?
Yeah, I think that's a great question, and clearly we're starting to see some enhanced consumer confidence across China and the region. And naturally, we have great products in Macau, Galaxy in particular, and I think people want to get out and stretch their legs and enjoy those things. And so is it sustainable? I think absolutely. I think the fact that, we have a very, very great supply and demand fundamental in Macau, with China being so close and Southeast Asia being so close, it lends itself quite well to strong consumer demand. And as long as, the headwinds stay light, if trade war and other macroeconomic conditions are stable, then we're pretty confident that this trend's going to continue.
How strong, Kevin? Because there are numbers out there. Some say that perhaps you could see a 13% increase in the second half of the year for gaming revenue.
Well, look, I hate to call the market, Haslinda, but we're pretty confident that we're going to continue to see some good stability and the growth because of that.
Are you concerned about risks from tariffs? We know that the U.S. and China are still negotiating when it comes to the rate of tariffs. But, if you look at what's being reported by Bloomberg Intelligence, they say that the rate of tariff will likely stay at where they are right now. That's high, and that could have implications on consumer confidence and consumption.
Well, I think that's very true. But as long as there's stability, I think we have optimism. As you well know, more than anybody, investors and consumers don't like uncertainty. And so if people can get comfortable with sort of the status quo, if you will, we believe that the consumer confidence starts to rise. And again, people's desire to get out and stretch their legs and enjoy entertainment in multiple different types of forms is a no-brainer. So again, as long as we see this sort of stable environment, we're pretty confident that growth continues in a good measure.
Is there a plan, a strategy to drive gaming revenue in the quarters ahead?
Oh, for sure. I think it's a multi-pronged strategy for sure. We have a philosophy of always bringing quality product online, just like we did in May with our new high-end super luxury Capella hotel offering. We'll also continue to lead the market in terms of large-scale event programming, particularly entertainment and sports programming. Our 16,000-seat arena really gives us a great vehicle to not only lift Galaxy revenues, but overall Macau economic impact. And so those have become kind of core fundamentals to our overall strategy. But at the same time, too, we can't forget about just the day in and day out execution of what is important to our customer. And that's making sure that there is a value for money proposition, that there's excellent guest experience, and that our products and services exceed their expectations. And so when you wrap it all up into that, that's really our ongoing strategy.
You talked a lot about your non-gaming strategy, your non-gaming business. How many more visitors are you attracting on the back of that? How much are you benefiting from your non-gaming business?
Well, we did last year between our MICE event, our MICE product, and our arena, we did 190 events. Our arena seats on average between 11,000 and 16,000 guests for every show, depending on the setup, whether it's end stage or center stage, etc. And we're going to continue to use that formula. I think you saw, I believe, the visitation growth was about 15% from last year, first half. And again, we can see that continued type of growth, we think, in visitation for the second half of the year and beyond.
What's driving that?
Look, I think there's a lot of things that are driving it. Obviously, the improved consumer confidence. But I think that Macau and the Macau government are doing a very good job of doing their very best to create a much more diversified entertainment offering in Macau. And all 6 of the gaming operators have gotten behind that. And so when you look at the amazing portfolio of events and shows and sporting events and so forth, in addition to all the improvements around the hardware, new restaurants, new hotels, etc., all of those things put together are creating a lot of demand for the market.
Kevin, Galaxy Entertainment has invested a lot of money. In fact, from the time you started, I think you've invested something like $13 billion in capital. What's the plan for the next 12, 24 months?
Well, as you know, we have the 4th phase of our development that is moving down the tracks right now. We expect to get that finished sometime in 2027. That will round out a lot of our major development efforts. And so then, it becomes a matter of picking and choosing important capital projects that can continue to improve our offerings that we believe will help grow the market as well.
And one of the markets you're looking at is Thailand, but it does seem like it's coming along really slowly. Any updates you can provide?
I wish I could. I think we're all a little bit disappointed that things have gotten stalled. We felt very strongly that our experience as the best integrated luxury integrated resort developer in the world, we thought that our experience was a big compliment to the opportunity in Thailand. And we look forward to hopefully seeing this gain a little bit more traction where we can then throw our hat in the ring and see what we can do.
Are you reviewing perhaps a timeline for when you can get started in Thailand?
Obviously, a lot of that will rely on what the government's effort and progress is around their approval of an integrated resorts gaming bill.
Well, the thing is, Thailand has been really slow in legalizing casinos in Thailand, and there's been a lot of political developments as well. Should you be rethinking your strategy and your interest in the market?
Good question. I think we have to balance all those things together, Haslinda, and look at it very, very carefully and make sure that all of the different variables that go into an important decision like investing in Thailand, we have to give all those due consideration, and that will be a part of our process.
In your projections, how important is Thailand to Galaxy Entertainment? Some say perhaps the gambling market is worth something like $33 billion, but a lot of the money is actually illegal. In your calculation of how important this market is to you, I mean, what kind of numbers are you coming up with?
Oh, I think you've seen a lot of the published numbers where, the market can be as big as Singapore's, if not bigger. Obviously, Thailand's strategic location is very attractive, and we think there's a huge opportunity there. And again, it all depends on, what the gaming bill ultimately looks like and what can be developed and how many competitors there are. But given the initial sort of indications as where the gaming bill was headed, it was very attractive.
How about Japan? I know that it's been on and off when it comes to that market. What's the plan for Japan? Perhaps an IR or not?
Yeah, I think that's the question we should be asking the government there. Is there going to be an IR or not? Nevertheless, I think, we always thought Japan was a very attractive market as well. And we're just going to have to wait and see how it all shakes out with the government. And we'll keep a close watch on it. But clearly we have interest if the right type of investment opportunity arises.
Kevin, let's take a look at the strategy as a whole at MGM. I mean, we've seen how concerts in particular have been, luring a lot of attention. Is that a key strategy for you?
Without a doubt. We opened our arena in April of 2023. And our team has done a really great job of going out and attracting the very finest entertainment across all different types of platforms, between Western, Mandel pop, Canto pop, K-pop, amazing world-class sporting events like the UFC and the ITTF. Those have driven lots and lots of people to the property and to Macau, frankly. And we see that those type of customers bring a significant economic impact to our property as well as the overall Macau market. And clearly this is something we want to continue to leverage on. We think we have a good advantage with the quality of our product of the arena and the scale of the product of our arena. And we're going to continue to lean into that.
Well, everybody's hoping that BTS will have a reunion and a concert soon. Any plans to bring BTS over?
I can tell you we're going to swing for the fences no matter what. No matter who's hot in the market, we're going to be out there swinging for the fences and doing our very best to bring them to Galaxy.
Realistically, in terms of boosting the revenue, when it comes to these concerts, what are we looking at?
Oh, gosh. I think, Haslinda, it varies from show to show, depending on the show itself and the entertainer and the fan base that loves that particular artist. There's a wide range of economic impact that we get. Sometimes with a K-pop show, we don't see as large an economic impact as you would with a show like a Jackie Chung, who has a more mature and maybe a little bit more affluent market. But nevertheless, we think it's good for the business, whether it's food and beverage, whether it's gaming, and depending on each type of show, we always see some sort of lift in our business.
Great stuff, Kevin. Thank you so much for joining us. Kevin Kelley, COO at Galaxy Entertainment Group. Coming up, a trade dispute with the U.S. turns into a political opportunity for India's Prime Minister. We'll look at how Narendra Modi is using that to win over voters in a crucial election. Keep it here with us. This is Bloomberg. Let's do a check on Indian markets as they kick off the trading day. It is slightly positive for the Indian market. Sensex up about 0.1% on the day when most of Asian stocks are taking a breather after 3 straight days of gains. In terms of the Indian rupee, 87.40 is the level we're looking at, still hovering at close to record lows. Now, tensions over tariffs are rising between India and the U.S., and Prime Minister Narendra Modi is now using the dispute to rally support ahead of a key state election, vowing to stand by farmers after President Trump slapped steep tariffs on Indian goods. Modi's top 8 say India won't cave to U.S. pressure on agriculture markets. For more on the political fallout, let's go to India trade and economy reporter Shruti Srivastava in New Delhi. Shruti, well, it does look like Modi is capitalizing on the situation.
Absolutely, Haslinda. So Modi is trying to capitalize on the growing friction with the U.S. President Donald Trump. And he's doing that to, bolster his support among farmers in the upcoming state election of Bihar. His recent commentary shows that, he has tried to show up support among farmers. A day after Trump imposed 50% tariffs on Indian exports to the U.S., Modi promised his supporters that he would protect the interest of farmers even at the cost of personal price he might have to pay. And this view has also been echoed by the Indian Trade Minister, who has signaled amply that India would not be conceding on agriculture and dairy sector, a key demand of the US. This is a clear shift in tone from the Modi government, which had been very conciliatory in its approach towards the US as it was negotiating an interim trade deal and hoping to escape the high punishing tariffs. However, that has clearly changed now, especially after Trump's repeated assertions that he tried broker a peace between India and Pakistan using trade. Also, the fact that he has, repeatedly made comments on India's ties with Russia and India's participation in the BRICS bloc. All these comments by Trump has only hardened, public opinion and sentiment against Trump, and Modi has been quick to seize on that. In fact, these comments have also seen a rare moment of unity between the opposition parties who have called Trump a bully. And they have warned the government against, conceding too much to the U.S. demand and giving concessions, offering too much concessions to the U.S. to secure a trade deal.
Shruti, just to put it in perspective, agriculture is important in India because half the population actually work in farming and related sectors, correct?
Yes, absolutely. Farming, the agriculture sector is a very crucial segment for the political parties. Farmers are one of the largest voting bloc in the country, and Modi understands that. And, most of them are small landholders. So even in the past, they have proved politically very effective, and they have brought in political change as well. In fact, in 2021, the Modi government had to repeal 3 controversial agricultural laws in wake of a year-long protest by farmers. So clearly, farming is a segment that the government cannot clearly ignore. What it also does is, by focusing on farmers, the government has tried to shift attention from the ongoing exercise in the state of Bihar, where the elections are due. There is a controversial revision of electoral rules, and the opposition has been demanding scrapping the exercise and has been demanding a debate in parliament. Now, by focusing on farmers, the government has clearly tried to shift attention from that exercise.
Talk to us about Modi's approval rating at this stage.
So, through all this, Modi's approval ratings have held steady, and the government has been, quick to seize the moment and realize the change in public opinion. There have been calls of boycott of American goods, and Modi and his party have been quick to seize on that opportunity and have made all the right noises to, not be seen cowing down to a foreign power. And therefore, we see this whole focus on, supporting the farmers and the national interest while it's dealing with the US for a trade deal.
I guess it all depends on how the economy plays out. If the farmers and the other Indians start feeling the pain from tariffs, that sentiment might just change.
Absolutely, absolutely. So, so far, the tariffs are going to be effective only August 27, and much depends on how the economic stress pans out. If there is economic pain going forward, we will have to see how the public sentiment and public support for the government is there. The economists have been saying that a 50% tariff is going to shave off almost 1% of India's GDP. So we have to see how the economic pain pans out and how the public responds to it.
Shruti, thank you so much for that. India trade and economy reporter Shruti Srivastava there for us. Meanwhile, Japanese sportswear giant Asics says it's looking at markets, including India, to further boost sales, even as it raised its full-year earnings forecast to a record. President and COO Mitsuyuki Tominaga told us why the company won't raise prices this year despite those tariffs.
20% of our revenue come from the U.S. operation. And where we develop these shoes is mostly in Indonesia and Vietnam. So the tariff was originally based around 20%. And with the new tariff, it was increased to by 19 and 20% accordingly. We have decided not to increase our price due to tariff for this year, because it is very important that we have been working strategically with the wholesalers, especially the running specialty stores. But with a very strong demand in the U.S. sales, we are all with the tariff and the cost structure, we are able to maintain the financial plan that we may have for the U.S. operations.
You're willing to absorb some of the impact of tariffs for this fiscal year, but what about future quarters? Because the Trump administration is going to be in office for another 3 years. What's the plan going forward?
Yes, obviously it is a big concern for us, but once again, we will not increase price for even first half of 26, but we will adjust costs accordingly towards the end of the year for next year. At the same time, globalization is also a big, important key driver for us. 80% of our sales come from outside of Japan. And so Europe, China, Japan, US is a big market, but also we have been investing heavily in India, Southeast Asia, Middle East, and South America. And these countries are growing even faster pace than their major market. And the third area that we're investing is in digital and also D2C. We have been investing on running application, the race registration. So we have a lot more touch points than before. And by doing this, we really understand the consumer a lot more, when they're buying, who's buying, and what kind of event trigger the purchase. So with all this, I'm very confident that we have a lot of areas that we could go further besides the tariff.
Mr. Yuki, would you be able to put some numbers on the expectations of growth and some of these markets you've just spoken about, including India? What sort of pace are we looking at here?
On average, we are looking at 20% growth going forward for 26 as well. As I said, we made a midterm plan in 24, from 24, 25, 26, and we achieved the financial plan this year.
Asics President and COO Mitsuki Tominaga speaking to Bloomberg's Paul Allen and Avril Hong. Now here are some of the other stories we're following. Oracle is cutting jobs in its closely watched cloud unit, taking steps to control costs amid heavy spending on AI infrastructure. According to our sources, impacted workers were informed this week that their roles were eliminated, with some of the cuts related to performance. We're told more than 150 jobs were cut in the Seattle area as Oracle prepares to move its headquarters to Nashville. Amazon plans to offer same-day grocery delivery in 2,300 cities by the end of the year, more than doubling the current number. It says customers will be able to order perishable items alongside frozen foods and household goods. The same-day grocery delivery service will be free in most cities for Amazon Prime subscribers on orders over $25. And that is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.